Right, can you hear me okay? Am I switched on? So I thought that having a regulatory topic would be a change of pace for this group, but it sounds like regulation's been a continuing theme. So let me continue that, and I'll spend sort of 15 or 20 minutes talking through this topic, and if there's any questions, happy to deal with them. Okay. So let's start with what money laundering is, just at a very high level, and I'm sure many of you know, but just from the perspective of getting everyone onto the same page. So what is money laundering, right? So it's the process of taking funds that are generated through crime and putting them into a seemingly legitimate state, right? So that you can freely deal with them after that. The size of the problem is, as you can see, huge. 3 to 5% of GDP, $25 billion in South Africa. It is a real problem. And when you understand what the fact that money laundering itself is actually what makes all crimes worthwhile. That is why money laundering is such a big problem. Nobody would bother with kidnapping and drug dealing and any of those things unless they could launder the money, because it would just be pointless. So this is what enables all crime, okay? And this is why there's so much focus in it globally. Just from a perspective of what does that look like from a body perspective, SAMED is the ultimate regulator in this space. The FIC is the Financial Intelligence Centre, is the primary regulator of the FICA Act, which is the primary piece of legislation in this space. And then over the last year or so, everybody would have heard a lot from FATF, right, who is the global watchdog. And FATF do many things, but one of the things that they do is they evaluate countries. So they go around and they do mutual evaluations. They test the country's ability to combat money laundering, and they issue reports. As most of you will know, the report that was issued towards the end of last year was not favourable for us as a country, and we were grey listed. What does that mean? It really just means that they're telling the world that we as a country are far higher risk than we were previously, right? We're a high-risk country. So if you're going to do business with people in South Africa, accept that your chances of running into things like money laundering are high. And so that grey listing comes with many consequences, including the fact that it becomes more and more expensive to do business here, harder to do business here, and so government will have a focus on this now, right? In an ideal world, we will get off the grey list in 2 or 3 years' time. That'll be the goal. Many countries have, and the longer it takes, the worse impact of it. But that's why it has such a big focus on it. And you will have heard about this in the news, right? Very quickly, how does this work? And it's just helpful to understand from an industry perspective how money laundering works. At a very high level, this is what money laundering is, right? So there's a crime, any crime that generates money, but the person holding that money needs to be able to do something with it, particularly if it's sophisticated crime. There's huge amounts of money, right? They go into the first step, which is placement, which means they've got to get that money into the banking system. Until they can get it into the banking system, they've got suitcases of cash, which they can't do much with, right? So getting it into the banking system is the first important part. Banks have been all over this for many years, so it becomes harder and harder to get it directly into a bank. So you need to do it more and more indirectly. Buying expensive stuff is one way, right? Because you pay for it, the money goes into the banking system, and you can then sell that asset. Layering is then the second part of it, right? Once that money's into the banking system, you want to have as many transactions as you can happening so that the distance between the crime and the money gets longer and longer and longer, right? So if anyone tries to track it, it becomes harder and harder. So buying and selling goods is the most obvious way of doing that. And then ultimately you go into the last step of money laundering, which is integration, which is you then get the money back out the system. So in a very simple way, if you bought an expensive asset, the money went into the bank, you sold it, you did that one or two more times to achieve layering, and then you sold the asset, you've got clean money. It can be in a bank, you can transfer it abroad, you can do whatever you want with it. Okay, so that's what money laundering is. Why might it matter to your industry and to your sector? Well, one of the first results of the grey listing, although it happened before the grey listing, but everybody was aware the grey listing was coming, was that there was an amendment to FICA, the legislation, late last year. Historically, there's been a very limited set of organizations who are governed by FICA. They significantly expanded that, right? So as banks and insurers have got better and better at combating money laundering, the criminals will find other avenues to do it. And so one of FATF's findings, and one of the 8 findings that really caused us to be grey listed, was that our net is way too narrow. You need to look further into other industries that money laundering can be done through, and you need to regulate them. And so the Act was amended late last year. Schedule 1, which lists all the entities, types of entities are regulated, was expanded. These are some of them, the new accountable institutions. Any of these may be applicable to anybody in any industry, but I guess my sense is that maybe the two that are catching most people and maybe most applicable to your industry are those first two, right? So anybody who sells goods that are valued at more than 100,000 Rand is then deemed a high-value goods dealer, and you are then automatically an accountable institution, and FICA from top to bottom is applicable to you, okay? That's a relatively simple one to understand. Credit providers may be slightly more difficult because the old legislation had quite a narrow interpretation of credit providers. It was really sort of NCA regulated people, right? That has been expanded now. So even if you're providing credit that's not regulated by the NCA, and you can be deemed a credit provider, in which event you're an accountable institution and FICA will apply. The onus is actually on every organization in the country to be able to prove to the regulator that they're not a credit provider. And credit provider has quite a wide definition, right? So anything from extended payment terms to normal loans to almost anything that involves delaying payment, right, or giving terms around payment can fall into this net. So it is important, I think, that's one that you need to take a view on. And ultimately, the most important message, I guess, out of my talk today will be, first thing that everybody needs to do, and it goes for every organization in this country at the moment, is you need to go and understand the new accountable institution regime and understand if you're an accountable institution. The FIC is a relatively aggressive regulator, probably the most aggressive regulator, maybe after SARS, right? So they take their role very seriously, and they are very active in the industry. So if you fall into this space, it will be a matter of time before a regulator comes and sees you. Most likely, that'll be one of those two categories that catches most organizations. Just to add this block on the bottom, many people don't realize that every organization, regardless of whether you're an accountable institution under FICA, actually had some responsibilities to report suspicious transactions and not to deal with sanctioned people. And so some parts of this, everybody already had to comply with, although most didn't know they had to do that. But if you're on this list now, the whole of FICA is applicable. Okay, why do we care? Why does FATF care? Why does the world care? Other than the fact that this is a way to launder money, and if you're not a criminal, it shouldn't be that big a deal. But it has knock-on effects, right? And at a very high level, these are some of them. The more your country is weak at money laundering controls, the more you attract criminals into the country. The more you allow that to happen, the longer you spend on a grey list, the longer people start to wonder whether legitimate interest and legitimate business can thrive in the country. It obviously is a way to fund almost any crime, which is obviously the one I mentioned earlier and is not great. But there is a lot of writing around the fact that it is economically damaging to a country to get a reputation that money laundering is not under control, and grey listing is the thing that gives that message. So the sooner that we can get off that list, the better. Okay. So if you are an accountable institution, if you happen to be an accountable institution, what does that mean to say that FICA is applicable to you? This is a very busy picture, and I'm not going to go into all of it, but I will say at a high level, there are a couple of steps to being FICA compliant. If you look at the first column there about business risk assessment, I'd call that foundational stuff, and it really is around, FICA is not a rules-based piece of legislation. It doesn't say, do these 10 things. It sets a number of principles, and you need to go or everybody who's an accountable institution needs to develop its own risk-based approach, its own rule set for how it manages money laundering, right? And if a regulator comes to do an inspection, the first thing they will ask for is your RBA, because they will measure you to that, okay? So that's the foundational piece. You will do a risk assessment of your business. You will understand where are the money laundering risks. And just to also add that we're talking money laundering here, but this act is also to prevent terrorism financing, right? So it's money laundering and terrorist financing. So where are your money laundering and terrorist financing risks in your business, and what are you going to do to try and get controls built into that? So that's what you'll do in that first foundational phase. Then you can kind of put the next two columns into one basket and say that that's your client onboarding. So whenever you're dealing with a customer, you have to onboard them in a way that satisfies KYC requirements, right? So you have to know who are they. If they're an organization, who is the ultimate beneficial owners of those organizations? Where is the human being at the top of that chain? And then you need to scan them, right? So they need to be screened. Are these politically exposed people? Are they sanctioned individuals? And what are you going to do around that, right? So we know that you cannot deal with sanctioned individuals, full stop. And for PEPs, you're probably going to risk rate them as high and do additional work around them, do things like adverse media screening, get proof of source of funds, things along those lines. But ultimately, those two columns are around really understanding who am I doing business with, and are they people that we want to do business with, and are we comfortable that the risk that they are involved in money laundering or terrorist financing, are we comfortable that that's low? So that'll be your first piece, and ultimately all of your onboarding of all your customers going forward will run through that process. All your customers will be risk ranked. So if they're high risk, you'll do other things for them, and you'll probably redo that assessment every year or 2 years to make sure that you're still comfortable with them. But that's going to be your onboarding piece. The fourth column around ODD is your ongoing due diligence. So probably something like every year you will rescreen your high-risk clients, maybe do your mediums every 2 years, your low risk every 3 years. And you're doing that because these lists constantly change, right? So the sanctions lists have never changed as much as they've changed in the last year. Between the Ukraine war and the Middle East and the like, they just keep adding to the sanctions list, right? So your list you screened against today is going to be different tomorrow. So you can't screen at onboarding and do nothing for the next 10 years. You may find that some of the clients have now become sanctioned individuals. And as soon as you trade with them, you're in violation of sanctions. Okay, so you'll do ongoing due diligence on certain your customers, somewhere between 1 and 3 years. And then you'll get into this kind of the transaction activity and CTR space, which is then, once you've got your customers onboarded, you need to be monitoring transactions. So when you're doing transactions, are you looking at them and understanding what's happening in those transactions? And you're doing that primarily to look for two things. So one is cash thresholds. So any cash transactions above 50,000, 49,999, have to be reported to the FIC. So you need to be aware when there's cash transactions that they exceed the threshold, and all that needs to be reported to the FIC. And then you need to be watching for suspicious transactions. So off the base of your risk assessment and your risk-based approach in the beginning, you're going to be understanding what is suspicious in your world. So somebody, for example, let me take a silly example, somebody who buys and sells equipment regularly, and it seems unusual to what everybody else is doing. That is something that would be suspicious in a high-value goods environment, and something in your system should allow you to see that, so that you can report that suspicious transaction. Because ultimately the FIC gathers all that information, and they sit with the banks, and they track all the suspicious transactions, right? So you don't want to not be reporting suspicious transactions. But it all comes off the back of your risk assessments, and then you need to monitor your transactions. And then the last column is that when you exit a client, particularly when you exit a client who, for reasons that they're too high risk or they're sanctioned or whatever the reason is, that you have processes in place that they don't come back into the loop, right? They don't come in through a different entity or a different name or a different structure or a different something. So you want to make sure that when they exit, they exit. Okay, so that is at a very, very high level, the end-to-end obligations under FICA. Is it a incredibly onerous piece of legislation? It can be, and you do need to put a fair amount of effort into the first piece, because once you set up and you understand the risks you're looking for, it does become easier. It's also an opportunity, I would say, that the risk-based approach is also your opportunity to limit what you do, right? You don't have to do everything. No organization has to do everything. So the people who have to do the most are probably the banks, right? They have complex structures. There are millions of ways to launder money through the banks, and they have to watch out for all of them. Probably every other business becomes simpler from there, right? So you want to use your risk-based approach to say, we really understand money laundering and terrorist financing. These are our real risks, and this is how we're going to guard against them. And then at least you're limited to having to do that, right? Because that's what the regulator will look at and mark you against. Is it a piece of legislation that the regulators watch carefully? They watch carefully. They know exactly what's going on. I've put 2 yellow circles there at the bottom, which I'll make mention of. So these new accountable institutions that came into place at the end of last year, in April, the FIC released a public statement to say that they had expected 60,000 new accountable institutions to register. And as part of your foundational step, you do need to register. And you need to register under the right category. Their statement in April was that they had a really small additional registration base that had come on board from the new accountable institutions, and that if you were an accountable institution and you hadn't yet registered, you were in contravention and you're liable for a fine. So they are already aware of who should be registering with them. They know there have been insufficient registrations, and that's the first thing that they're starting to track. So it is really important to understand if you're accountable and if you are to register. That at least gets you a little bit of leeway with the regulator, right? So you want to get that right. We have recently had the regulator now release Directive 6 and Directive 7. And Directive 6 and Directive 7 talk to the risk assessment piece I spoke about. So for organizations who are in the high-value goods space or the credit provider space, Directive 7 is relevant, and it says for organizations in that industry, you should already have registered, and now what you should have done is you should have done your risk assessment, and you should have submitted that to the FIC. So they have now publicly come out and said, there's two things at the very least we would have expected you to do in these first 9 months, and that's register and do your risk assessment, submit both of those to the FIC. So they are tracking this carefully, one, because they know that there's money laundering risk and they want to get a grip on it. Two, because FATF is watching every move, right? So we will be engaging with FATF on an ongoing basis as a country, and the country has to keep demonstrating progress, or we will not get off that list. So it's not something the government can afford to take their eye off, and so they will continue to monitor this. Obviously, they will start to do inspections over time. They will select whoever they select, however they select, and they'll start going out there. And I guess once they start to issue the first fine or two, and this regulator does fine, and they do fine heavily, that'll get everyone's attention. But I think our advice is certainly, if you can't get everything done initially, and most people can't get everything done initially, understand if you're an accountable institution, register, do your risk assessment, submit it to the FIC. If you need to refresh it later, you can do that, right? But show a start with the thing, and then start with your KYC processes. The last thing you want to do is find out that you actually are dealing with a sanctioned individual or a politically exposed person without any controls around it, because you can't undo that, right? So this law was passed at the end of last year, and it was effective at the end of last year. So it is effective now. So you don't want to have to try and explain away the fact why you are dealing with sanctioned or politically exposed persons without controls in place. The transaction monitoring space, it's important, and it'll certainly be your next step, but getting the right people, not letting the wrong people through the door is the most important step, right? And as part of the setup of this, if you are an accountable institution, it's going to be one of the things you're going to need to do as a foundational step is actually run your customer base through the sanctions tools. They hit all of the normal lists, Interpol, UN, UK, whoever you decide you want to hit in your risk-based approach. At least it'll give you an initial view as to whether you have any real problems right now with customers that you either need to exit or put some controls around. So I won't go into a lot of detail around, there are requirements around annual training, there is a lot of requirements around MI and reporting that needs to be done. You know, there will be some leeway in getting all of that in place up until sort of, I guess, the middle of next year or so, but those initial things do need to get done. I think I'll probably leave it there. Hopefully I've given you some sense of what money laundering is and why it might be relevant in your world, and if it is, what that will encompass. But I'm happy to take any questions if there are any.
I came across this FICA story already before, but maybe you can enlighten me, and pardon me if it's a stupid question. You mentioned if you sell any good more than 100,000 rand, it's like the threshold, right? Yeah. Now, well, we do. But we do sell to Netcare, to Mediclinic, and government hospitals. So do I have to screen all these clients?
So let's just run that process, right? So if you sell goods that are valued at more than 100,000 rand, then you're an accountable institution. So the first thing you need to do is register as an accountable institution, and then you will develop your risk-based approach. Your risk-based approach will set for you what you need to do, but it will absolutely include screening. So yes, you need to screen your customers for at least sanctions and PEPs, and the big challenge, which even the banks still struggle with, right? It was also listed in the FATF mutual evaluation as a risk in this country, and in many other countries for that matter. You need to follow that organization to its ultimate beneficial owner. So you will see. So is it difficult? It is difficult. You will see government has started to take some steps to try and improve that, right? So they are now putting in place in SIPC the ability to register shareholding, which historically was never there. So there is an attempt to try and help, but unfortunately that is the requirement, right? Because for the very simple reason, if you ignore government and regulation and everything else, if you just look at the risk of money laundering, if you only scanned an entity, the easiest way to get around that is you just put a couple of subs in place and you'll be fine, no matter who you are. So yes, the short answer to your question is yes. You need to screen. If you're an AI, an accountable institution, you need to screen your customers, and do the other things. But screening is important.
Okay, well, quite honestly, I mean, I understand the concept and the reasons, but practically, I really don't know. I mean, if anybody knows how to do that, please tell me.
Remember, don't shoot the messenger. I didn't write the law. I'm just saying it is the law. So look, I mean, I suppose the slight positive news is that this is not a new piece of legislation, right? The banks, the insurers, gambling, they've been at it for years, right? So there's lots of assets around as to what are the best processes, what are the best technologies, what is there out there, who do you outsource to, how do you do all of this? There's decades of learning, so you get to leverage that. So it's not something that you have to kind of sit down at a desk and figure out how do I screen, right? There's lists, there's tools, there's technology, everything is in place, but you do unfortunately have to go and get it implemented at your organization, and it does involve cost. But I hear your frustration. It's the same frustration the banks have been voicing for 20 years. It is a challenge. But I suppose the last comment I'll make, because I work in this space, obviously, is it is something that we need to get a grip on, right? Because it is the money that we launder through all of our organizations in this country come from the worst crimes. They don't come from pickpockets, and they come from organized, syndicated crime. And so it is the only way to stop crime. Yes.
So I have a few questions.
Sure.
We actually asked Deloitte to come, Dean, to present to members, I think it was already last year, because we
Probably
knew that this was a requirement. But we also realized that I think a lot of our members had not paid attention to this requirement, which is why we thought it would be pertinent to have him come back. Because previously, a lot of the members were not impacted, but now you are. And so it's a legislated requirement if you meet the requirements of the definition of, what's it called?
FICA.
A FICA.
Financial Intelligence
Okay. I
Center.
mean, no, the organization is a?
FIC, the Financial Intelligence Center, yeah.
Okay. You mentioned a politically exposed person. So if you've done business with a politically exposed person or a sanctioned person. So can you just define what those are? And then, sorry, I have one or two more questions. Also, is this limited to engagements in South Africa or across borders? So if you sell outside of South Africa? And what happens if you don't meet these requirements? What are the sanctions?
Okay, so let's start with the first question. So sanctioned individuals are people who are listed on sanctions lists. There are a number of them. So the most prominent ones being the ones maintained by the UN, the UK, the US, Interpol. So there's a number of them, but those are the most well-known ones. And they are lists of people who have been officially sanctioned by governments. So when you saw with the Ukraine war, when the UK government stood up and sanctioned a list of people from Russia, those people go into all of the sanctions lists. And so those are sanctioned individuals. You may not deal with them. End of story, right?
Does South Africa have such a list?
So we would scan against the global lists, right? So we would scan against UN, UK, US, and all of those lists, right? When it comes to PEPs, politically exposed persons, so they're a category less challenging than sanctioned. You can still deal with politically exposed persons. They are generally speaking people with political ties, and generally speaking, there are global lists as well, and there are providers of those global lists. Places like WorldCheck and the like provide global lists, which are updated constantly. So you will find that the Prime Minister of the UK will be a PEP. But there's also a local PEPs list, right? So our local politicians are on PEPs lists, right? That doesn't necessarily mean that there's anything wrong with it. It just means you need to have higher scrutiny. So typically you will still do business with PEPs, but you will rate them as high risk, typically, and you will do a bit more research, right? So you might not, for example, so when you onboard a normal client, you'll check that they exist, that you can identify them, that you can verify that they exist, and you'll do those basic steps. when it comes to PEP, you might decide to do, for example, adverse media screening. So you may say, okay, well, I've got a PEP. I've done some adverse media screening. I see that there are hundreds of articles about this person being involved in corruption and all sorts of things. Do I want to do business with them? And then you take your view on that, right? And so there's more of a process around PEPs, but there are local and international lists for that. And typically that's how it runs with organizations. If they find a sanctioned individual, they won't do business with them. If they find a PEP, they'll go through additional processes. And if they find really bad adverse media, or the person can't provide source of wealth or source of income or source of funds, then they'll decide not to deal with them. But you will still deal with PEPs as long as you're comfortable with the risk that it poses, right? If you don't do that, so if you don't comply with the Act, you're in contravention of our FICA Act, and you'd be fined by the FIC. If you breach the sanctions regulations, well, that's depending on the list that you've breached, you find yourself in challenge with the UK or with the UN or with whatever, right? And our government has signed up to those. So you can't deal with sanctioned individuals. So if you breach any of these, they do fine, and they do fine heavily. But that's the challenge of it, but it does have to be done. I would just add, I know you mentioned challenges. I don't want to raise more challenges, but the sanctions and the PEPs lists work on names, right? So not because globally we don't have a unique identifier for people, so they work on names. So some of the challenge in onboarding and doing these runs is that you do get a lot of false positives, right? Because it runs on names, right? And there's lots of common names in the world. So some of the heavy lifting you do have to do is around the fact that it will flag people, and between 7 and 10% is the general average of your onboarding will flag. But probably 1% or less of your actual customers you'll end up not doing business with because of it. Many of them are false positives. But you want to be able to demonstrate that you run that process, right? That you screen, assess, clear them, and move on.
Yep, we've got a question in the middle there, and then we'll come to Mike.
Hi, I'm not sure if I heard you correctly, but did you say if you are a company that's selling on credit, you therefore become a lending institution? Yeah.
So the short answer is probably yes. There is a specific section, Section 11, which talks about credit providers. That's a very generic term I'm using, and explains what's in there. And there's two types. So there's a credit provider regulated by the National Credit Act. They are accountable institutions. And then there are credit providers who are not regulated by the NCA, but give credit, right? And then there's a lot of detail around that. So the FIC has actually released a policy paper, a position paper, on how you define that. But there is very few things that, when it comes to giving credit and extended payment terms, there's very little that falls outside of that. Very little. So, like leasing of immovable property, there's a couple of things, but there is a specific position paper on it that you can read on the FIC website. But if you give credit, you're probably going to be an accountable institution.
Just the last question. So what does it mean for us? Because I know most of us here have got 30-day accounts, 60-day accounts with our customers. What does that mean for our companies in terms of registration with FICA? Do we have anything to do with that, or it's just one of those definitions that are by the way?
So the first recommendation I have is that everybody needs to understand whether they are an accountable institution, right? So when we come to this term of incidental credit, which is, you owe me 500,000 rand, I invoiced you, and I give you 30 days to pay. Then we're in this. So it's not really that you've given credit; it's your payment terms, right? So is that incidental credit? Because incidental credit still qualifies you as an AI. So you do need to understand that properly, right? It's a process that we as a firm are going through, Deloitte, right? So we do the same. You have payment terms. So we all have to go through that process to say this is how we do business. But the more the period and the more benefit you give around payment periods and payment terms, particularly if you're giving credit, pure credit. If people are filling in a credit application, you're very likely to be an accountable institution. If you are, and it'll be a question of law as to whether you are or whether you aren't, you must register. You're obliged to register under a specific category with the FIC. And that's the first thing you need to do is go and register. They will, they're not going to come to you or anything unless you haven't registered and they decide to come and ask. but it's your obligation to go and register as an accountable institution on the FIC's website. And then this.
Sorry. So following on from that, I mean, we've got extended payment terms, for want of a better description, with a lot of our government institutions. And, you know, a lot of our payment terms are, as the T's and C's describe on our invoices, 30 days or 60 days. And as we've seen and has been discussed in the forum today, we've got 3.5 billion rand sitting out with government. And often that exceeds 360 days. So would we then be classified as a lender?
So I'm not going to give you a yes no answer on this question, because
pick a lane.
So if incidental credit is the one thing that everybody is still trying to figure out, right? So there's a line between granting credit. When you say to somebody, fill in an application form, I will give you credit, you can buy on credit, you're an accountable institution, no question. When you're actually selling cash on delivery, basically, right? But you buy, I invoice you, you must pay. But obviously they're not going to pay on that day. You maybe give them 24 hours, you might give them 30 days. How long do you give them before it's deemed credit? If it's your business practice and it keeps happening regularly and you keep allowing it regularly, that people can pay 180, 360 days, I think you're very much at risk of being deemed a credit provider.
All right, so from a SAMED perspective, can we engage with the DTI? Because then we pretty much everybody would be classified as a lender.
Yeah, the challenge there, it's not anyone's terms or conditions, it's just a supplier that doesn't pay. So the only thing you can do is stop supplying. There's still outstanding payments.
Yeah, and look, I mean, the fact that the FIC has issued this discussion paper, and you can go and pick it up for the FIC website, because that's not the law. They're just trying to share their thinking, right? Because it is a little bit of a grey area. So it'll be interesting for you to go and look at it, and I'm happy to chat to you about it some more. But that there is a line where payment terms will not qualify as credits. So it was easier under the old law because you had to be, if you were regulated by the NCA, you were in. If you weren't, you're out. Now that they've taken that away, it's more difficult.
So from a stakeholder perspective, who would then be ultimately responsible? Us as a supplier, or in this instance, the stakeholder being government, who do we hold accountable?
So listen, the money laundering legislation, so the FICA legislation is legislation that places obligations on the seller when you're dealing with your customer. So it's KYC, right? It's know your customer. So whenever you are dealing with your customers, the question that they're trying to prevent with this legislation is to say you have to know who you're dealing with and where that money is coming from and what's happened to that money before it hits your bank account. And so the obligations are on you. If you want to structure your business in a way that makes you not an accountable institution, you have to focus on getting completely out of the credit, assuming no other categories catch you, right? You have to make sure that you get out of the credit granting of credit business. So you need to be out of that definition. So, and I understand that it would be nice to have a simple answer to this. And as I say, we as a firm are looking at the same topic at the moment, right? Because we have something similar. We don't grant credit, but we give payment terms. So there's a line, but I would say if you typically are going longer periods, 180, 360 days, I think that would be very much into the incidental credit space, and that is an accountable institution.
Okay, I think we've got clarity on that. We sort of over time, and I want to just revisit one of the topics, so I'll take one more question, and then we'll let Dean get out the hot seat.
Just a question with respect to the SIPC that you referenced earlier. Yeah. Is this dovetailing with their requirements that they've put forward just recently, or is it the same? I must say, we've handed the whole lot over to legal and to the auditors. So for all I know, it's exactly what you just discussed now.
So look, I mean, the changes you're seeing out of SIPC are government's first attempts to try and help in this space, right? Because everybody's got a problem with UBOs globally, because there is no golden source. If you want to check IDs, company registrations, sanctions list, there's a golden source you can go to, and so you're fine. You go hit the golden sources and you're covered. UBO, there's no golden source, right? So we have no golden source of shareholding in this country. So at the moment, the way the banks have always done it is they ask for it, and they ask every year to renew it. Please give us your company structure. But there's no way to know for a fact that it's correct, and there's no way to know for a fact that it's going to be correct going into the future. So it was one of the things that FATF listed. They said, we can see you don't have a grip on your UBOs. You don't know who they are. You need to know who they are. So it is heavy lifting for the banks. And there are a lot of tools and technologies out now that help, web scrapers, things along those lines. And so there are technologies. But it was pushed back to government in many comments to say, the place that should be the golden source is SIPC, right? That's where we should have it. Just like it is for directors, it should be for shareholders. And so government's trying to fix that. But that's going to take time. Right? You can't rely on the fact that SIPC hasn't got the information because they've only started collecting it now. So that's not going to be a solution, or it may never be an ultimate golden source solution, but it's certainly not even going to be a half-decent solution for the foreseeable future until that data starts to build up. I mean, it's a positive step, because there is no golden source. But you ultimately have to ask your customer who ultimately controls you.
Good. Thank you very much, Dean.
Good.
Really appreciate the time.
Pleasure.
Great.
I'm sorry I was the bearer of bad news.
No. Thank you.